Budget.
What is a budget?
A budget is an estimate of income and expenditure for a period of time.
Phoenix, why must we use a budget?
Budgeting helps you keep track of all the money you have coming in and all the money you are spending so that you don't overspend and end up with no money. Let us look at the following income and expenditure statement, also known as an income statement or profit and loss statement. An income statement is a financial statement or document that reports the earnings of a company and all the expenses. Look at both income statements. This amount is called the balance carried forward. This is money brought or carried over from the previous year. It can be a profit or a loss. Look at the income and expenditure statement for the year ending December 2011. In 2011, the club made a profit of 10,508 Rand. Remember, profit is the difference between the total income and the total expenses. Have your calculator ready. 462,000 subtract 451,492 is equal to 10,508. Look at the income and expenditure statement for the year ending December 2012. In 2012, the club made a loss of 414,792 Rand. Remember, loss is the difference between total income and total expenses. Using a calculator, 459,743 subtract 874,535 is equal to negative 414,792. This negative sign shows loss. We normally don't write the minus sign, but we need to specify that we are dealing with a loss.
What can be done to make sure the club makes a profit?
In 2011, the club spent 360,000 Rand on salaries and wages. In 2012, they spent 732,860 Rand. So, they need to reduce the salaries or reduce the staff members. In 2011, the club spent 15,972 Rand on telephone and internet. In 2012, they spent 22,361 Rand, which is 40% more. They need to stop using the internet so much and stop abusing the work telephone. In 2011, the total income was 462,000 Rand. In 2012, the income was 459,743. This means the income decreased. Look at the income statement on the left. The income is higher than the expenditure. So this amount is called a surplus or profit. Look at the income statement on the right. The income is lower than the expenditure. So this amount is called a deficit or loss. Our expenses increased from 451,492 Rand in 2011 to 874,535 Rand in 2012, which meant that in 2012 the club made a loss of 414,792 Rand. This means the club will run out of money and will need a loan to survive in 2013. Look at the budget of Loving Care Preschool for the month of July 2013. The left column represents expenses, which is money spent, and the right column represents income, which is money earned. Let me quickly explain the meaning of budget value, actual value, and variance. For the expense column, variance is the difference between an actual amount and the budgeted amount. When working with expenses, the budgeted amount is the amount we are expecting or planning to spend. The actual amount is the amount we end up spending in reality. When budgeting, you should always try to budget for more than what is actually spent. This way, you should always have money left over after all expenses are paid. Look at the salaries row. The difference between the budget value and the actual value is 0. So, the variance is 0.
What does a variance of 0 mean?
A variance of 0 means we didn't spend more than planned. Note that the actual and budget amounts are the same. Look at the groceries row. For groceries, our budget was 3,600 Rand. But we ended up spending 4,300 Rand. So we have a negative variance, which is not good. This means we spent more money than expected and means we might not have enough money to cover the cost of something else in our budget. Look at the water and electricity row. Our budgeted amount was 1,250 Rand. And fortunately, we only spent 1,200 Rand. This means there is a variance of 50 Rand. When working with expenses, a positive variance is always best. Let us now look at the income column. For the tuition fees row, the budgeted amount is the same as the actual amount. So the variance is 0. Look at the interest row. We were expecting interest of 490 Rand from our savings account. We received 500 Rand, which is 10 Rand more. For the income column, variance is the difference between the actual value and the budgeted value. With income, it is always a good idea to budget less than the actual amount. This way, if you get more income than expected, you will have more money available after all expenses have been paid than you expected. Let us have a look at financial control.
What is financial control?
In simple terms, financial control is controlling the cost to a company. Basically, they will have money and will need to control what is done with that money.
Why is financial control important?
Good financial control is important in a business as it helps keep the company solvent, meaning that the company is running well and is financially healthy. Good financial control protects money from potential fraudsters or thieves.
What are good methods of financial control?
In order to achieve full control over finances, it is recommended that the business must have an agreed budget and full financial planning. We should also reduce the amount of cash within the business. Dealing with cash is very risky. We recommend that cash payments should be minimized. All payments of wages and salaries should be made by check or bank transfer. The business should identify and correct high-cost problem areas. For example, a high telephone bill or high internet fees should be reduced. Let us have a look at this example. In this example, we will show you how to develop a budget for a new project.
Why must we develop a budget?
Without a budget, you have no reliable method for estimating profits and for controlling expenses. Trevor wants to expand his publishing company, and he decided to offer private history classes. The first thing we need to do is to determine the project goals. Why are we starting the project? By this statement, we mean what is the specific goal for the project. Making money is not a specific goal. Make 120,000 Rand profit is specific. Next, we define the cost categories for the project. In Trevor's case, his expenses will include paying salaries of tutors. He has to pay rent and electricity around 680 Rand. Trevor's competitor spends about 1,000 Rand buying printer cartridges and stationery. Trevor thinks this is the amount he will also spend. Trevor has to compare the cost of other competitors so that he can charge a reasonable tutoring rate. Trevor must decide what the hourly tutoring rate will be. He can also sell books to boost his profits if he wants to. Essentially, in every budget, the total income must be higher than the total expenditure. Try the following activity.
The first one has been done for you.